Welcome back everyone to the Money Control live stream. Yes, we are back. You're watching Markets with Santo and CJ. On this show, me and Santo here, we debate over markets, we argue over sectors and stocks, and sometimes agree over our weekend plans.
Well, CJ here, like many of his friends who comprise the new wave of investors who have taken the market by storm, feel that making money from investing does not take much of an effort. Trust me, CJ, it's really hard work. And also, have you heard of the saying that
No.
stock market is a place where the patient make money off the impatient?
As long as the impatient keep booking their profits, I bet everybody can make money. Also, as I said in the morning, it's about timing the market, not always time in the market.
All that is hindsight, CJ. Let me tell you that.
By the way, guys, can you believe it was Wednesday and we're already talking about our weekend plans? I mean, I feel I'm very tempted to, actually file a petition to the government and, ask them to make Thursdays to Sunday weekend forever.
So a 3-day working week of sorts. Well, that's pretty, I would say, magnanimous, considering that, these days I read quite a few articles and also hear people say that, why should anyone be working at all in the first place?
No, but that is because our generation believes in working smarter, right? Not harder. It's not necessary to slog in the office for 5 days a week. If you can do the same work in 3 days, why not?
Okay, we'll see to that. We'll see to that.
What's the harm? It will increase the societal well-being,
Okay.
It will enhance everything. Anyway, that said, now that you know why we are here, it's time for us to take a status check on what happened on Dalal Street today. Right,
Well,
Santo?
on this show, we will be talking about why the markets extended the losing streak to the third consecutive session, what has moved Avanti Feeds, Indian Hotels and Max Financial, and we'll also talk about the rising dollar index and its implications for Indian equities.
Yeah, I mean, it seems like the market was just not able to sustain the good mood or the jolly mood that it started the day with. I mean, it looked like we were finally going to have a green day and we're going to go into the weekend with smiles on our faces. But now I'm worried that a lot of these guys who are, participating in the market today are going to go with long faces back to their families and friends and possibly bring down the, the cheer factor of their weekend plans. So I'm really worried about that. I mean, both the Nifty and Sensex look set to probably close in the red, as you mentioned, for the third time this week. Probably second week of losses that we are going to see. And what was driving the losses on the street? HDFC twins, TCS were the major laggards. They were the party poopers, the mood spoilers on the street. But there was a ray of hope, and that came in the broader market. The small cap and mid cap stocks stole the limelight today, Santo. As I mentioned in the morning, that it is possible in a consolidating market where large cap indices are not going anywhere, maybe small caps and mid caps can take the mantle for the bulls. And that is exactly what happened. They outperformed the large cap stocks today.
Well, CJ, it's not very surprising that, there's not much of action in the market today. Overall trading volumes have been on the lower side, and for good reason, because traders don't want to go into a long weekend, carrying a lot of positions, neither the bulls nor the bears. That's because, any unforeseen development during the weekend could kind of, catch them on the wrong foot. So,
and the fact that it's a longer weekend. It's not like your usual 2-day weekend.
Yeah, so, for the bulls, the risk would be that, if there is, if say Russia steps up its aggression, and for the bears, the risk would be, if there's a sudden ceasefire or some truce.
Yeah.
So neither sides really want to, be caught on the wrong foot. So that's the reason why you're seeing lower trading volumes. Besides, also most of the big economic indicators don't, give too much cause for wanting to go bullish on the market at this stage, be it inflation, IIP, and yet, yes, there is there's a silver lining to the dark cloud. You're seeing a lot of retail investors and high net worth investors being bullish on mid cap and small cap stock. This is clearly one segment which is outperforming.
So
right now.
retail investors do know where to put their money, huh, Santo?
Okay, we will
Smartness and intelligence. Yeah. Well, I mean, this market is clearly not giving us any joy, but I hope that our next section will definitely give you a lot of joy.
So let's take a look at the stocks which were in the limelight today, starting with Indian Hotels. So this stock managed to hold ground in a weak market. The main reason being that overall sentiment for hotel stocks in general is bullish because of the more people now beginning to travel. This is also the vacation
Everybody is
season,
going on vacations, isn't it?
except for us. So
Except for us,
yes, so there is a lot of general positivity around hotel stocks. If you look at Indian hotels, for 7 quarters it posted losses, and then during the December quarter it turned corner, and analysts expect that this trend could continue here on.
And of course, with the risk of lockdowns and COVID probably receding a lot more than what it was in 2020 and 2021. So maybe there is some merit to this argument.
Yes. The next stock is Vedanta, which also held ground in a weak market today. Good volumes as well. Overall outlook on the metal sector remains positive. So you could see the company report some good numbers. That's what the market is expecting.
Yeah, but this stock is, I mean, the drama that surrounds Vedanta all the time. I mean, every time there's a corporate announcement, you have either the investors going after the promoters, or sometimes being happy with the promoters. It's a very, very volatile situation when you, at least from a investor promoter relationship perspective.
Yeah, but CJ, those who read the balance sheet properly and held on to their shares, see, there's a good reason why investors don't want the company to delist, and the share price has clearly shown that. So that's what I was saying about
and of course, why would they?
Being patient.
I mean, if they are not seeing value, why would they want the shares to be delisted? If they see that the share can rise, is of a higher value than what the promoter is offering.
Mahanagar Gas is the third stock. Again, interestingly, CJ, fair bit of action in gas stocks, although the outlook remains
that's
weak
a strange one.
In terms of quarterly earnings. Gas prices have been rising. Because of that, there are fears that volumes of gas companies could be hit, which will then reflect in their profit margins and net profit numbers for the March quarter. Mahanagar Gas saw some huge trading volumes today, but delivery volumes still were fairly low, so it could indicate some kind of short covering in the stock. You had Ambuja Cements, which continues to witness fairly heavy volumes for the last 3-4 days. The stock has been rising continuously, backed by volumes. Today, overall, cement stocks too had a good day. You had stocks like ACC, Dalmia Cement also being among the gainers in a very lackluster market. So in the case of Ambuja Cement, you're not seeing very heavy delivery volumes, indicating that it's becoming some kind of a trader's delight at this point.
I don't know about trader's delight, but a lot of analysts are pretty optimistic about it. And I will not just discount this move as something that has been driven by speculators, right? Because it maybe today delivery volumes are not that strong, but over the past few sessions, we have seen the entire cement pack move in tandem and move higher. And probably it is because this June quarter is usually the last 3 months you can see a rise in construction activity before the monsoon season kicks in. And usually monsoon is seasonally a weak quarter for cement companies because not much construction activity is happening.
Well,
so
I
you
can see that CJ. I can see that CJ. You started doing your homework rather than just chasing the stocks.
I always do my homework.
Max Financial is the last stock from my side. Again, MK has said that this is one stock. Max was one of the key gainers in today's market. Broking house MK has said that the negativity over life insurance companies in general may have been a little overdone. There is value at these levels. One of the reasons probably why the market is shying away from life insurance stocks could be that there is the LIC IPO which is waiting in the wings. So those wanting to take an exposure to the life insurance sector may be looking to put money in the biggest of them all.
Yeah, it's also become a very, I think probably the negative sentiment is also just a sign that it's become a very boring sector.
So, CJ, what do you have on your plate today?
I have ONGC, the biggest gainer on Nifty today. We talked about it in the morning how, the 6 to 7% jump in crude oil prices overnight could become a trigger for, buying on ONGC. So that really played out to the script, 3% rise in the stock. Also, some of the big mutual funds such as ICICI Prudential, DSP MF and SBI Mutual Fund are actually big buyers in the stock in March. So that goes to show even the smart money is seeing potential here. Next up is Avanti Feeds. Okay, the stock was up about 8% on heavy volumes in today's trade and has also risen about 18% in the past 1 month. So the trigger, according to a lot of the people we spoke to in the market, was that there is a possible shortage in the shrimp market globally, and that could lead to a little bit of a pricing power for Avanti Feeds. So this is one stock where probably market is seeing scope for good earnings going ahead. So that is one
but
to watch
let
out
me
for.
also caution you, whenever market sentiment takes a turn for the worse, it's usually mid-cap and small-cap stocks that take a big beating. So just bear that in mind.
Usually, but there can always be exceptions,
There
like
are
in life.
always
Like in
exceptions
life.
to the trend.
Deepak Nitrite, okay, another a chemical stock where it has risen about 3% on hope that the earnings could be pretty strong in the in Q4, basically this quarter. Phenol prices, which Deepak is basically one of the biggest producers of phenol in the country, and they have risen about 14% in Q4, Santo, and that provides a lot of tailwind for margins, a lot of boost for the margins of the company, because it will increase prices, and demand anyway is quite strong for the sector. So that is one stock. And lastly, HDFC Bank, okay. Big laggard in today's session, was down about 2%, and interestingly, it has fallen below its price that was there before the merger was announced with HDFC.
So all that excitement was in the end was for nothing.
Cleared out. And it's going to announce its earnings on Saturday, by the way. And there was a lot of short positions. I mean, we both know tomorrow and day after there will be no trading, right? And Saturday, Sunday, and then now Monday. So that means when Monday the stock opens, market is betting that the stock may open actually lower. So they may not even have any comfort from the earnings of the company. So yeah, I mean, those were my takes, but I guess you have something to say on on something interesting that I and probably the rest of the market has missed out on.
Well, we'll talk about the dollar index, which has hit 100 now.
Century?
Yes, it has hit a century, and let me tell you here though that it's not exactly good news for the Indian market.
Why?
A strengthening dollar basically means trouble for most emerging economies, because a stronger dollar by extension means that a weaker local currency. Okay.
Rupee in our case.
Yes, rupee in our case. Typically what happens is whenever the dollar index strengthens, which is the strengthening of the dollar and the weakening of the rupee, you see foreign investors pulling out or reducing their exposure to Indian shares.
So you are suggesting that probably the recent strength in the dollar is also contributing to the sort of selling that we have seen from FPIs?
That could be one of the factors. We did see some brief reversal in FI selling, but over the last 3-4 sessions, again we have seen that foreign funds have been selling quite heavily, and one of the reasons for that is a strong dollar.
But don't worry so much, Santo. I mean, you should just keep calm and trust our retail investors.
Why
not? I mean, I agree that FPIs have sold close to what, 2 lakh crores of Indian shares in the past 6 months. But look at what retail investors have brought to the table. About 1.7 lakh crores worth of buying directly as well as indirectly through mutual funds, because most of the mutual fund money is also retail money. You can
I look at it a slightly different way. I would say that retail and whatever you say, the so-called informed or intelligent investors, what they might have ended up doing is actually bail out foreign investors.
Oh, please. If there is a seller, there will always be a buyer. Maybe the buyer is more intelligent this time than the seller. We always put FPIs on the pedestal. Maybe it's time that we turn the tables on them and put our own domestic investors on the pedestal. That said, even the finance minister, I mean, you should take cue from her. She's also been, talking up our shock absorbing capacity as retail investors. So yeah, I mean,
for how long is what I would ask them to that.
The days of freaking out over what FPIs are doing or not doing are over, my friend. Trust the retail bandwagon, or maybe join it also.
So just a quick take on the markets before we go to a last section, which is on the horizon. The overall markets continue to be under pressure. Nifty is at 17,470. Sensex is also down by about 0.4% at 58,300.
Yeah, and banks are driving the losses. Santo, yes, ICICI Bank, IndusInd Bank, both in the red. HDFC Bank, of course, is the biggest loser. And even it seems Kotak Mahindra Bank has also joined the party, down about 1.2%. So banks are not looking good.
So I think there's always been this conspiracy theory, CJ, that you should never trust whenever there is an expiry in Bank Nifty.
The 3 p.m. move.
The 3 p.m. move. So that's something that people.
Yeah, it's possible. I mean, it's possible that there is some squaring of a position happening here, because frankly, a lot of traders were a little, long on the banking space. But it's a bit telling that, yesterday banking space, which was actually leading the market higher and helped it close a little off its day's low. Today, it's contributing to the to the downfall towards the end of the session.
Exactly.
So that is something to really watch out for when we come back for trading on Monday.
So what do you have on the horizon, CJ?
Yeah, I mean, earnings and a lot more earnings. I mean, we have Infosys that will be announcing its earnings shortly after the close of the market. HDFC Bank, that is going to announce its earnings on Saturday, as I said earlier. Though both these stocks alone are about, what, 14 to 15% of the index. They have 14 to 15% weight in the index. So those are two to watch out for. Apart from that, next week, Nestle, you have ICICI Bank and you have SCL Tech that will be announcing their Q4 earnings. So yeah, earnings would be the big event to watch out for. Apart from that, on Monday, China will release its Q4 GDP data. So that is something that we'll be keeping an eye out, because this quarter in China was all about COVID lockdowns and COVID outbreak. So how much of that has affected activity? I mean, if you go by leading indicators, high frequency indicators that a lot of these research firms come out with, the picture is not looking pretty. And China is a big driver.
I've been maintaining that all throughout. The picture is just not looking pretty at all. In fact, this
some
morning,
pictures are looking pretty, like the one I took just before
Vedanta
coming
founder
on.
Nikhil Kamath, in fact, he said that he's moving some of his money into gold. Because he's not very bullish on equities, and he feels that valuations are quite expensive. And this is coming from the person who runs the largest broking firm in the country. I think you should take note of that, and the fact that one of the Perma bulls, that JP Morgan's Marco Kalanovic, he said that it could be probably time to take profits. He's indirect. He's not said that openly, but he said that this is you should consider taking some money off the table.
Well, Nikhil Kamath has been bearish about equities since 2021, early 2021. So I mean, that's the caveat there. By the way, that said, this is it on the show today. We'll be catching you live 9 a.m. on Monday morning. Please stay tuned to moneycontrol.com and Moneycontrol app for any updates, and also post your feedbacks on the links that you can see on the bottom of your screen. And from my side, have a great weekend. Please do not take your long faces because of market's performance today to your families and friends. They are looking forward to a great trip with you. So do not do that. But Santo, what are your plans?
Pretty much locked up at home.
Pretty much locked up at home?
Yes.
Why? Go out, chill a little, contribute to the economy.
Because you guys
demand कैसे आएगा? Demand कैसे आएगा?
You guys have flooded all the resorts and other places.
So what, do you have allergy from us? क्या? क्या ऐसे क्या? तुम tetanus shot लेके आए हो क्या मेरे पास बैठने के लिए? ये क्या बात हुई? जाओ थोड़ा घूमो बाहर बच्चों को लेकर जाओ.
Maybe for the next weekend. Well, with that, it's a wrap on this session. Thank you for watching.
Thank you so much.
And have a great weekend.
Have a great weekend. Thank you.